market commentary. My name is Charlie Fulkerson, joined by my dad, Mr. Weak, Chuck Fulkerson.
Charlie, why do you call me weak?
Because we punch you a lot and you can't help it.
Come on, that's not very nice of you. See, the people that are listening to the show every day are starting to hear that you beat me with Thor's hammer and that you punch me all the time. They're going to think that I get beat up by my 6-year-old.
I do. And John, what do you say about it? It's my new co-host.
You're already my co-host. All right, so let's go ahead and dive right in. Welcome, everybody, to Friday's...
Welcome, everybody.
Oh, there's John saying hello. It's the Friday edition of the Daily Market Commentary. We got not a whole lot to cover today, but we're going to dive right in. So I want to first look at the S&P. On the ES, yesterday I had talked about, for those of you that were day traders, I said, if we've got this slowing momentum, and actually Charlie taught it. We said that if a ball is going up in the air, is it speeding up or is it slowing down?
Slowing down.
Right, and we saw the ball was slowing down, and we said, you can probably get a little day trade in just below this region here. But there wasn't a lot of room to roam because of some of this area down here. So this was a little tiny move down for those of you that were able to take it. But I said it's more of a reactionary market. And that's kind of what I feel like we're in right now, is this reactionary market. Above us, above 2742 is that ceiling, that if we break through the ceiling, we're going to continue to go which way, Charlie?
Up until we go to a new ceiling.
That's right. So we will go up until we run into a new ceiling. And I see this as a potential breakout. Now, the reason I like this breakout, remember the rule on breakouts. For those of you that have seen the video that I did on breakouts, it's because the reason that those breakouts exist, it's because there's a pile of orders, an inventory of orders that gets eaten away. And as that order inventory gets eaten away, look at the first time it's touched, we left some orders behind. The second time it was touched, we left some orders behind. The third time it was touched, we left some orders behind. We keep bouncing off this 2742, 2745 kind of region, and it keeps rejecting it. So if we can break through here, this could become a pretty good opportunity for price to run higher. So I'd look to this for a potential price to run higher. Same thing in the Nasdaq. In the Nasdaq, we've got a very similar price pattern for a potential breakout to the upside. Now, the difference in the Nasdaq's breakout is that it wasn't touched in the past in the same location as the S&P's breakout was. So it's got a little bit more. It's not quite as clean of a setup as the S&P breakout is. Remember, the more times it's touched, the better the breakout opportunity becomes, especially if there's room to roam. So looking at crude oil, let's talk about crude oil. So yesterday, I had said that I'm not willing to short crude. And the reason I wasn't willing to short crude is because we still had a pretty strong upward trend. However, I said that you could get, if you were so enticed, you could get back into a potential short right here. And price almost got us there and didn't touch the level. I'm still going to leave this level here because I still think there's some validity to it. But we said, a decent price target is down here around 70, and you might even want to get long down here around 70. Now, that 70 that we found was on a 15-minute chart. And simply by being on the 15-minute chart, it means that we've got a lower degree of probability. We had to come way over here to find it, and it is a lower degree of probability. So we put it's a dashed line and a purple dashed line, which means that it's definitely the lowest degree of possibility, and which is no surprise why price went right through it. So there's no reason you should lose money on a trade like this.
It's going down, down the mountain.
Yes, Charlie, down the mountain. So it continues to fall, and we'd have to now look for the next logical stopping point. Well, in my mind, the next real logical stopping point may not be until down in this region here. So you've got room for this to fall. And I'm actually going to look at this up here as a pretty good potential reversal area in the future. So if you're so inclined on crude oil, then this area right in here could be a pretty good reversal point in the future to get short. Now, I'm not so sure we're going to make it back up to there anytime soon. So that's really the caveat there. typically when you've got a breakout, a strong breakout like this, and that's really what this was. This became a breakout. When you have a strong breakout like this, you don't always get a retest back into the origin of that move. All right, gold. Gold is slowly but surely making its way back up into this potential reversal point up in here. I think that there's still room for it to continue to go higher. We got a nice little pop on it yesterday, and now we're still moving. So I would look down in here if we do get a pullback today for a potential reversal, maybe somewhere in this region right here, because this was the old resistance, which became the new support. Right in here, there could be an opening in there. Moving over to bonds. In the bond arena, our bond market, our breakout long is still breaking. It's still Breaking Bad. Get it? It's Breaking Bad. I never really saw that show, but I heard it was really good. So it's continuing to move higher, and we've got no reason now to do anything with it except to manage your stop and move it up. You might want to move your stop up to this region here because we've got a little bit of a fair price value area there. Looking at the Aussie, so in the Aussie, we've got a reversal way up here, are still in an upward trend. I'd be okay if somebody right now said, you know, I'm going to candle-to-candle trade this thing and get long on the next candle with a higher high.
I'm going to candle-to-candle this with this thing.
Yeah, candle-to-candle with this thing. So I don't think I've taught you candle-to-candle trading yet, Charlie, but what it means, each one of these red and green bars are called candlesticks. And if you notice, look at these red candlesticks. In each of these candlesticks, the top of the candle is called the high. What's happening to each of these highs? Each one of these highs are getting what? They're getting lower, right? See a high right there, a high right there, and a high right there, right? Everybody see that? Can you see that?
Yep.
So candle-to-candle trading means I'm not going to buy it until I get a new candlestick that looks like a high.
Then you better get a bull.
Right.
For
it's got to
pet.
be right. So if let's say the next candlestick looks like this, would I buy it? Because this is the high. This would be the new high. Would I buy it yet?
No.
And I wouldn't buy it because I don't have a new what? A new high, right?
Yep.
So what if the next candlestick looked like this? Would I buy it?
No.
What if the next candlestick looked like this? Would I buy it?
Yes.
Because I have a new high, right?
Yep.
That's what candle-to-candle trading is. So for those of you that have never done candle-to-candle trading, I think I've got a video on the YouTube channel somewhere on that one where you can watch some of the details. But that's really the setup, and this one looks like it could be setting up for one, frankly, right about now. So hopefully if you get this video early this morning, you can see it. In the euro, so we bounced up off of our euro level, and I said yesterday that it was kind of meh, and so I suggested you take your stop and move it up, lock in profit, and that's exactly why, because of what happened soon after. Great. The Canadian dollar, we have finally broken out of this Canadian dollar range, this bottom that kept hitting, and so I'm not sure where the next stopping point is going to be on the Canadian. We've got a level way down here that we put in a long time ago, but once again, I'm still going to hold off on this. It's still in between a range that I don't want to mess with yet. Let's talk about Great British Pound and Japanese Yen. So on our Great British Pound's continuing to show weakness, continuing to fall, and I don't think that I'm going to be looking to be a buyer at this point. And I think a large part of that is the tensions for Brexit and kind of, who knows what's going to happen next. So we would look to potentially get short on a rally up to here, but look at these daily charts and all these wicks on the daily chart. It's not moving a whole lot each day, but it is fairly volatile. So there's enough volatility in there in order to trade it. You could take the breakout below this low since we've bounced off of it fairly weakly and we've come back to it again. In the Japanese yen, we hit our Japanese yen entry yesterday. Very strong move down out of there. It hit its profit objective with this level right here. So nice catch on that one. For those of you that were able to catch that Japanese yen short as it has moved down, we're now back in between two areas on this yen. If you're still short, you can still be in it. No reason not to be. You just take your stop and move it down to lock in some of those gains. So that's about all I have for today. Charlie, anything you want to add before we log off for the day?
We'll see you. I meant, not you will. We will see you on the Daily Market Commentary.
All right. Thanks, everybody, for joining us, and we'll see you next week. Not so sure we're going to get a video up over the weekend or on Monday as we're leading into the Memorial Day weekend. So thanks so much for joining us, and I hope everybody has a safe and happy Memorial Day weekend. See you soon.
This is Charlie and Chuck Fulkerson, who is Mr. Week.
Very nice. Have a good weekend, everybody. See you.
What's your week?